First question from Ron. Are there any specific trade strategies using the market sentiment tool? Yes and no. In general, Ron, when we see the market strategy shift from a neutral to a sell warning or a neutral to a buy warning or a light buy, we may not take many actions at that time. That might just be slightly in the noise. The actions we're probably taking at time is preparing to say, okay, maybe I have some bull put credit spreads right now. Maybe I have some bull call debit spreads. I've entered a sell warning. Let me maybe change my alerts. Let me change some of my ideas, or let me at least start thinking about what I might do to manage if the market starts to turn. We will take action on our open positions when we start getting into more of the strong bullish buys, very bullish buys, or you'll also see the very bearish sell warnings. Recently, when we got into these very bullish buy positions in September, that's when Ernie and I started opening new married puts. You might be looking to open leap calls when SPY was around 35.85. That seems like it would have worked out, right? Flirting with 4,000 just the last few days. We're at the very bearish sell warnings. I might consider buying puts to hedge my open positions if I'm trading stock or I've got maybe some covered calls. I'm more likely, of course, going to consider maybe buying a put option. In 2022, what we shared over these Friday presentations off and on was a strategy that we used for uncertain markets rather than doing credit spreads, bullish or bearish in 2022, which we showed from January to June. Both bear call credit spreads with a high 85% probability, the preferred criterion an investor would use, and bull puts with an 85% probability were both at losses, even in a down market, because it was a whipsaw market, not a straight down market, as straight down as it was. And those presentations were discussed, that data was discussed in the presentations. Is 3% per month is 3% profit per month possible? Move with the markets and focusing on the trade simulator tool here. I'm sorry, the market sentiment tool, Ron, I apologize. Yes, we might open new married puts, new bullish positions when we see those strong bullish buys. We might open some new bearish positions, but more than likely, when I start to see bearish sell warnings coming up as the market's been strong, or I start to see the strong bullish buy alerts come up as the market has been weak, it's because I already have positions open from the previous trend, and now I have to move with the market. I'm more focused on adjusting the open positions to prepare for a potential switch in the next 10, 15, 20 days, as opposed to opening new positions, just closing what I have, whether it's profitable or not, and opening new positions. I'm still going to want to manage, and I absolutely might close positions, Ron, if I have a profit. But as an options trader, you know you're not just holding money aside, a large bulk of your portfolio aside, just to see a sentiment indicator change and then just push everything all in. That's not the way to be successful long term. You're more gambling at that point than being successful. When we see these triggers, if I see a very bullish buy, if I'm in any bearish positions, I start to manage those. Ernie's term might load up extra on some of my long positions, maybe move up some long calls or roll down, as we just discussed, some long calls that are down in price to try to take advantage of an upward movement by giving myself a lower break even, positioning myself for the next potential movement based on the market sentiment tool. I may close and do the opposite. If I'm in bull put spreads and they're successful, when I start to see that very bearish sell warning, I might close those positions, not at full profit, but for some profit, and then open bear call credit spreads or bear put debit spreads to put myself in that position. If I'm long stock or in a covered call and I see the bearish sell warnings appear, I'm going to be buying puts, especially if I want to stay in these positions long term as a core holding of my account. That's essentially it. It does equate at times more to management of your open positions. But yes, if I have spare capital, as I mentioned, back in September, we saw those very bullish buys. I bought 2 new married put positions, one on or around September 27th, the other on October 4th. Ernie also opened one up as well. There are, of course, pause on this section of your questions, variety of videos. Just go to YouTube, of course, PowerOptions YouTube. Use that search function here in the videos section for market sentiment, or market sense in this case. Hit enter instead of the arrow, because that works so much better, Ron. And there you go. Using the market sentiment for call or put buying. Discussion on market sentiment tool. Let's see, there's a lot of reasons. So here's the one strategy, 3% for monthly profit, move with the market. As I mentioned during this presentation, we showed that if I was doing bear call credit spreads from January to June of 2022, even though the market, you could draw a line straight down, it was a whipsaw market. Bear call credit spreads in your portfolio, following a reasonable approach that I'm going to talk with you in a minute about, based on your third question, is that, yeah, I'm sorry, you're still down about 22, 26%, if I'm remembering correctly. If you did bull put credit spreads with proper management, you were down almost 86% in that portion of your portfolio. But if you switched with the market sentiment from bullish to bearish, you were actually hitting desired targets that you might want to see for the credit spread positions in your portfolio. By switching, taking the profits on the bulls when you saw the very bearish sell warnings, moving to bears and back and forth. But you still got caught twice. There was still a portion where you were down 50% in that portfolio. It recovered, but because of the sudden moves, I can't remember the date, but a sudden move based on a Powell statement when it was in a very bullish buy sentiment, and he said something unexpected, and the market didn't like that for 3 days, your bull put credit spreads would have been drawn down to a 50% loss of where the portfolio was. You likely would have closed at that time with the management. Yeah, so current look and explanation of, oh, that's not what I wanted. There's one, here you go, a little bit better. Using the market sentiment tool for bullish or bearish spreads, plus look at the skew of CBOE. So that's one you might want to consider there, but these other ones too talk about how we use the tool, what we're looking for more in depth than what I just gave you right now. So you want to check those out. Just go to the videos, Ron, look for market sentiment.